Hello and welcome to Business Insights. I am Alfreda Ambe-Basi. This morning we'll delve into the exciting world of cross-border opportunities in financial services in Nigeria. Join us as we uncover the potential, innovations and strategies driving this dynamic sector. But first, let's give you a breakdown on the major business updates and market trends after this break. Thank you for staying with us. In Nigeria, the federal government has announced the signing of a memorandum of understanding with Cuba, focusing on food security and agricultural advancement. Minister of Agriculture and Food Security, Senator Abubakar Kyari, signed the MOU on behalf of Nigeria during the G77 Plus China Leaders Summit in Cuba. The partnership will enhance various aspects of agriculture, including biofortification, seed improvement, mechanization, technology adoption for higher yields, and reduction of post-harvest losses. Cuba has expressed its commitment to supporting Nigeria's agriculture and food security initiatives with its resources and expertise. The Nigeria Communications Commission (NCC) revealed that subscriptions for 5G services in Nigeria have reached a significant milestone with over 500,000 subscribers. Professor Umar Dambata, the Executive Vice Chairman of the NCC, highlighted these achievements, noting that the telecommunications sector's contribution to Nigeria's gross domestic product has grown from 8% in 2015 to a quarterly contribution of 16% as of the second quarter of 2023. This growth is attributed to the increased investment profile in the telecom sector, which has risen from $38 billion in 2015 to $75 billion presently. Dambata credited this success to effective regulatory activities and operational efficiency, highlighting substantial growth in the industry over the past 2 decades, including the impressive number of telephone users, internet subscribers, and broadband users in Nigeria. And away from that, in a bid to offer more convenience and security to customers, InterSwitch has announced its collaboration with Google Pay. This partnership will integrate Google Pay into the InterSwitch payment gateway platform, allowing contactless payments and secure digital storage for businesses and individuals. Merchants can now store payments within Google Wallet, streamlining the InterSwitch platform's checkout process and improving user experience. This integration facilitates the acceptance of international cards, enabling businesses to serve a more extensive global customer base. Moyiwa Saba, Managing Director of Digital Commerce and Merchant Acquiring at InterSwitch, expressed pride in this collaboration, emphasizing its potential to empower businesses and ensure payment safety. And moving on, the video gaming sector in Egypt, South Africa and Nigeria is poised to achieve a collective value of over $2 billion at the end of 2023. This encompasses a wide spectrum of products within the video games market, spanning console games, PC games, mobile games, and online games, along with related hardware and accessories such as gaming consoles, controllers, and virtual reality headsets. In Egypt, the video games market is projected to reach $983,800,000 in revenue in 2023, with an expected annual growth rate of 8.85%. In South Africa, the revenue market is expected to reach $558,400,000 in 2023, with a projected annual growth rate of 7.51%. And in Nigeria, the video games market is anticipated to achieve a remarkable revenue of $483,400,000 in 2023, with projections indicating an annual growth rate of 9.03%. And now to the Middle East. Dubai Aerospace Enterprise (DAE), the Dubai-based aircraft leasing company, has successfully secured a significant financing amounting to $1.6 billion. CEO of DAE, Feroz Tarapol, expressed confidence in the company's growth and acknowledged the strong support and confidence demonstrated by banks in DAE. The funds raised will provide DAE with the flexibility to tap into banking liquidity and strengthen its existing banking relationships across various regions, including the Middle East, Asia, North America, and Europe. In August 2023, DAE finalized a significant deal with China Aircraft Leasing Group, further solidifying its position in the aviation industry. And moving on, GE Healthcare Technologies, an American multinational medical technology company headquartered in Chicago, has received a substantial grant of over $44 million from the Bill and Melinda Gates Foundation for the advancement of AI-assisted ultrasound technology. This funding will support the development of AI-driven ultrasound imaging auto-assessment applications and tools, specifically focusing on improving maternal and fetal health and addressing respiratory diseases. GE Healthcare, known for its X-ray and ultrasound machines, stated that the grant's primary objective is to enhance access to high-quality healthcare globally, with a particular emphasis on low and middle-income countries. Caption Health, a company acquired by GE Healthcare earlier this year, will be responsible for designing the technology to operate on a variety of ultrasound devices and probes, including more affordable handheld devices. The world's largest offshore wind power facility, located in Fujian province and operated by China Three Gorges Corporation, has been fully connected to the grid and has started generating electricity. The wind farm consists of 11 offshore wind turbine units, including the world's largest 16-megawatt offshore wind turbine unit. The wind turbine will generate around 360 million kilowatt-hours of electricity annually, which can replace around 800 tons of standard coal per year and reduce carbon dioxide emissions by about 203,800 tons. Chairman of the China Three Gorges Corporation, Li Mingshan, said the 60-megawatt offshore wind turbine is a breakthrough in the core technology of the offshore wind power industrial chain, and it will boost the sustainable development of the country's offshore wind power industry. Canada's clean technology projects face delays in receiving incentives, risking over 50 billion Canadian dollars, equivalent to 33 billion US dollars in investments. Prime Minister Justin Trudeau's government pledged 27 billion Canadian dollars in investment tax credits over 5 years to promote green technologies, aiming to compete with the incentives offered in the US. Industry leaders stressed the urgency of implementing these incentives to support Canada's transition to a low-carbon economy and meet emissions reduction targets. Updates from the capital, commodities, and currency markets are next after this break. Stay tuned. Welcome back. At the close of the trading session on the Nigerian Stock Exchange, NGX, yesterday, a total of 550,280,396 shares were exchanged in 8,357 transactions, amounting to a market value of 8,925,828,790 Nigerian naira and 9 kobo. Compared to the previous NGX trading day on Friday, there was a 26% increase in trading volume, a 71% increase in turnover, and a 20% increase in the number of transactions. The current market capitalization of the Nigerian Stock Exchange stands at 37.2 trillion naira. In total, 114 equities listed on the NGX were involved in trading. The day concluded with 29 gainers and 26 losers. Northern Nigeria Flour Mills led the gainers with a 10% increase in share price, closing at 14.85 naira per share. This was followed by Owando, Champs, and Stanbic IBTC Holdings. On the losing side, Omatech Ventures experienced the largest price decline of 10%, closing at 0.36 naira per share, followed by Skyway Aviation Handling Co., Better Glass Company, and Red Star Express. United Bank for Africa recorded the highest trading volume with 109 million shares traded, followed by Universal Insurance Company, Transcorp Nigeria, and Access Holdings. And away from Nigerian Stock Exchange, at the close of the last weekday of trading on the Johannesburg Stock Exchange, a total of 737,138,968 shares were exchanged in 382,707 transactions, amounting to a market value of 48,291,814,768 South African rand and 66 cents. Compared to last week's GSE trading day, there was a 120% increase in trading volume, a 100% increase in turnover, and a 9% increase in the number of transactions. This current market capitalization of the Johannesburg Stock Exchange stands at 18.7 trillion rand. In total, 311 equities listed on the GSE were involved in trading. The day concluded with 173 gainers and 124 losers. Delta Property Fund led the gainers with a 76.47% increase in share price, closing at 0.30 rand per share. This was followed by Elise Holdings, Dipula Income Fund B, and Trustco Group Holdings. On the losing side, Brimstone Core Limited experienced the largest price decline of 8.86%, closing at 4.32 rand per share, followed by ArcelorMittal SA, Transaction Capital, and Sasfin Holdings. Redefined Properties recorded the highest trading volume with 86.7 million shares traded, followed by Seabain Stillwater, SA Core Real Estate, and FirstRand. In the commodity market, wheat sells for 591 US cents per bushel, gold for $1,928.43 per troy ounce, silver is valued at $23.15 per troy ounce, while copper is trading at $3.73 per pound. Brent crude is currently $95 per barrel. This increase is attributed to expectations of a growing supply deficit in the coming months. Major oil-producing countries like Saudi Arabia and Russia have extended their supply cuts, contributing to this trend. There is optimism regarding China's oil demand, and some experts predict that Brent prices could surpass $100 per barrel later this year. In the parallel markets today, dollar is bought at 955 naira and sold at 960 naira. Pound is being bought at 1,210 naira and sold at 1,220 naira, while euro is purchased at 1,010 naira and sells for 1,020 naira. And that is all we have for you today on Business News. I am Alfreda Ambe-Bassi. Stay tuned for an in-depth exploration of how Nigeria is making its mark on the global financial stage with Grace Komolafe. Keep watching Business Insights.
No business survives the long run with a mediocre run in it. So we grew up in an era where our parents wanted us to be doctors, engineers, and lawyers. And we carry this on to our children. We want our children to go to university and come out to be doctors, engineers, and lawyers. But that is not our role in their lives. Our role in the lives of our children is to help them to find their purpose, what they are passionate about, and give them the opportunities and the resources to pursue that purpose and achieve that purpose, and if possible, help them to build a business out of it. Realizing that it may be totally a tangent with what we are doing or the business we have built that we're expecting them to come and run. They may not be interested in that. And this is precisely what business schools should also do, to help people to find their passion zone, their purpose, and help them to actualize it and make a business out of it. That is the way in which we can have thriving and sustainable people building businesses that they stay with. If we force them to do what we want them to do, which they don't have the passion for, at best, they'll be mediocre. No business survives the long run with a mediocre running it.
People want to sit down here. Thank you for joining us on Business Insight. I am Grace Komalafe. Today we shall be looking at the topic cross-border opportunity for Nigeria in the financial services. And we have a guest in the house. In fact, we have two guests in the house, and I am glad to have a financial expert, Ezekiel Agayere. I am correct? It's good to have you, sir. And I also have Shegun Oke. He's also a financial expert. Thank you for coming. I'm sure that another guest will be joining us via Zoom shortly, and it's going to be a good time out here today. So exploring cross-border opportunities for Nigeria in financial services can be very significant, and especially within the context of West Africa and the African continent as a whole. So I'd like to ask you, let's speak to the appropriate strategies, knowing that Nigeria is the largest economy in West Africa. So what specific strategies should Nigerian Financial Institute adopt to expand their presence in the West Africa economy and monetary union, given the common currency and economic ties?
Well, Nigeria needs to make itself known to the community, outside community, that they have a financial wherewith to finance their projects and move on with it. Yeah. Nigeria needs to get the information out there to the other countries. Yeah.
Okay, so I would like to ask, okay, I'm very okay. Okay, so probably you also have one or two ideas to share about this. What are the strategies? What are the strategies that Nigeria's financial institution should adopt to expand their presence in West Africa economy?
Well, Nigeria being a leader in the African region, I think there's a lot of value chain around Nigeria when it comes to financial services. Take, for example, how financial technology has grown in Nigeria. Everywhere you go to, you see a woman or a man with a POS, which has been able to generate some form of low income for them.
Okay.
So intellectual property can also be escalated from the way Nigeria has been able to
Okay, can you please project?
So I mean, Nigerians' intellectual property around financial services can also be exported to the other West African region. Okay. Because Nigeria is a hub that the other African states can learn a lot from.
Okay, thank you very much. So, as a member of African Continental Free Trade Area, so how can Nigeria leverage its membership in the African Continental Free Trade Area to promote cross-border financial services? And what regulatory challenges need to be addressed in facilitating this?
Well, you also realize that one of the reasons for integration is to remove restrictions like cross-border free trade. Okay. You know what I mean? So if there's less restrictions between the African states, trade will be more seamless. You know what I mean? So the bottlenecks for restriction is the major thing that Nigeria or the African states should work towards, and also like a common currency like what the euro has been able to adopt. It would also strengthen the value of the local currencies among the African states or the West African states. So those are some of the things I think the African states can do to promote and project trade among themselves.
Okay, thank you very much. So I'll come to Agayere. Nigerians are the set of people that they go all the way out for their people. Even when they go out of the country, they don't forget home. At least to some large extent, you see Nigerians sending stuffs back home, sending money back home, doing a lot of things back home. So I'd like to ask, what innovations in cross-border remittance services can Nigeria Financial Institution explore to tap into the significant remittance flow in and out of the country?
Thank you. I think the strategy is to make sure that whatever you send out, there's payment made back to you, okay, because somebody owns those products. Once you do that, Once you're able to do that, then it's easy to continue doing the transaction, continue doing your transactions.
Yes, thank you very much, sir. You would like to be part of this conversation?
Well, like I said before, financial technology has opened up a lot to Africa, the diaspora, and everything. So money transfer was not as easy as it is now. You know what I mean?
Yes.
And the monopoly that institutions like MoneyGram and the likes were holding has been broken down. So you see little apps, little financial institutions that have been able to drive remittances and money transfers between Nigeria and the other African countries. So I think financial technology, is deepening, is expanding, and it's really enriching the African market.
So, thank you. So, many Nigerian businesses are looking at expanding into neighboring markets, and we have issues of risk management and all of this. So I'd like to know, in the context of trade finance, what role can Nigerian banks and fintech companies play in supporting regional trade within West Africa, and what are the key risks involved? I'd like to ask
well, the question is, does the Nigerian bank want to go into a foreign country and set up branches in a foreign country? If they want to, then it makes things a lot easier, because you sell whatever in either in naira or in the foreign currency of the country you are in. The key issue is, how does the parent company get its money back? And that is what the company has to sit down and strategize about. How do we get our money back in Nigeria? Is it through the branch that we have there, or is it through the product? If we sell a pen to you now, you pay us in the currency you have in your hand. What do we do after that? Do we sell? Do we keep the currency you give us, or do we change it to the currency of the home country, or whatever currency? Now the question is, after you sold the product, what is the risk? What is the risk inherent in that, in selling that product? Because there's still another risk. There's a foreign currency risk. What happens when you sell that product? If you sell it in Benin Republic, you sell it in their currency, okay? How do you get the proceeds of that product back to Nigeria without taking a fall in the prices in your currency?
Okay. All right. Thank you very much. Why I'm asking you the question, I also asked. Okay, that's because we would like to have different,
more solutions.
More solutions around it. So I also like you to address this question.
Okay, like the issue of risk management. You see, the Nigerian currency is on a free fall. When I'm even scared in the morning to open the dailies or find out information of what the exchange rate is now. But I know the West African market, the leaders, and the Nigerian, who is supposed to be a pioneer in a lot of things, just like South Africa has taken the lead. You can see the way South Africa has brought together some countries, and they are now the BRICS country.
Mm-hmm.
That's innovation. They are also looking for how to break the autonomy that the dollar has. So Nigeria should also be very innovative about how they are going to go about risk management. Like I said, producing a common currency for the ECOWAS countries or for the African countries. Financial experts should come together and see how they can edge the local currencies. But you can see that the local currencies for the African states is on a free fall. When these issues can give anybody a heart attack or so. So I think a lot has to be done with risk management, you know, across the African states on how they can entrench risk management, because I don't think they've done much on that at all.
Okay, thank you very much. Let's look at this next question. Nigeria has a significant Muslim population. You know, Nigeria, we have a significant Muslim population.
Okay.
And exploring opportunities around Islamic banking and financial institution, I think would attract more investors, if you agree with me. So I'd like to ask, what are the potential opportunities and challenges for Nigerian financial institutions looking to expand their operations in Islamic finance within neighboring countries with significant Muslim population? Talk about the Chad, you know, Niger, you know, and all.
Well, I think the Islamic finance has an ethos of risk and reward. You know what I mean? They don't believe in interest. They believe that, oh, if you are doing a project, we share both risk and reward. It's a good innovation, you know, because the Muslims, you will realize that they follow their faith, and their faith guides them even in the transactions that they do. How we can import that to other African countries? I think countries like Chad, Niger Republic, they even have a bigger Muslim population than even Nigeria. So I think Islamic finance, it's entrenched in the Quran. So I think the knowledge about Souq and other Islamic products are already very versatile among them. So I don't think Nigeria is even coming in late in trying to entrench Islamic finance. You know what I mean? But you can see Islamic banking is cropping up now. You know, is it sustainable? That's another question. You know what I mean? The issue of risk and reward. If I tell you, if I bring a transaction for you now, I know we're going to share risk and reward. So will I put in the proper risk management from my own end when I realize that, oh, if we're sharing risk, we're sharing reward, it can go anyway. So people who are doing business around Islamic finance, are they really being held accountable to see a transaction through when the ethos for Islamic finance is on risk and reward? No, I mean risk and reward, yes. That if we're making money, we're sharing. Yes. So if we're making a loss, we're also sharing the loss. So for me, it has always been an issue with Islamic finance, but that's the most I can say.
But despite, because you talk about having Islamic finance entrenched in their religious book, I guess.
Yes.
So, but then I want to ask, is there something they are doing differently that is giving them a leverage or something, an edge, and that you think Nigeria finance should also do, or something you think they should take out that probably Nigeria finance should? I mean, you get it.
You know what is attractive? If there's like a media campaign and says, oh, we're not charging interest. You know what I mean?
Yes.
That will first attract you to even see what is going on. Definitely. But you realize that no money is free. You're still going to share the risk and you're still going to share the reward. I think Islamic banking has gone around in a very novel way to attract people that, oh, we're not all about the interest, you know, there are no hidden charges. We are here to support your business, and if you make money, we share in it. If you also make a loss, I think the ethos of Islamic finance alone is refreshing, is salvaging, you know. It gives you a lot of comfort that, oh, you're dealing with a business partner, you know what I mean, who means well for you.
All right, thank you very much. So let's look at infrastructure finance, such as, I'll come to you, I think I'll come to you, such as road, bridges, energy, and all of that. Nigeria is doing a whole lot, you know, within their region, if you ask me. So I'd like to ask you, how can Nigeria collaborate with neighboring countries to attract investment and finance infrastructure projects on a regional scale? And what financing mechanism can be explored?
Well, what we can do is call them into call the other countries into a meeting, and you ask them to get involved. Tell them the advantages of the infrastructure projects you're trying to develop. If it's a road from here to Niger, tell them how things will move from Lagos to Niger, the advantages of it. Once they know the advantages of it, then they will come in.
Okay, thank you very much. So I also bring this question to you. So, like the last administration, there was a construction of a railway line from Nigeria to Niger. I mean, it's part of it, So I'd like you to answer this question as well, How can Nigeria collaborate with neighboring countries to attract investment and finance infrastructure projects on a regional scale? And what financing mechanism can be explored?
Well, I think the development banks that Nigeria has, we should work with the African Development Bank to achieve this feat. You know what I mean?
Yeah.
The infrastructure bank that we have. So I think the content it should create around infrastructure development is working with the regional hub of African Development Bank, and to see how this scale can be achieved. Those are experts about infrastructure development. So it's not something that they should actually advise us. They should be like a template on how this should be achieved. So the Development Bank in Nigeria should work with the ECOWAS and also the Regional Development Bank on a way forward on how we are going to achieve this, with the collaboration of other stakeholders in the states.
Okay, so in the case of financial inclusion, especially in the underserved areas, the rural areas and all of that, what steps can be taken to promote financial inclusion in border regions and these underserved areas? And how can this contribute to expansion of microfinance and mobile banking services?
The good thing with financial technology is reaching the underserved. You see, POS are being deployed to places where you never thought they could reach.
Yeah.
One of the reasons why banks closed down branches that they had in the villages was that there were no activities. And you could realize that with financial technology, there's not so much investment in fixed assets and fixed infrastructure. So I think financial technology should just be broadened and widened. You know what I mean? Development finance around financial technology. Innovation, novel things are coming up every day. The finance companies should be more empowered to be able to drive business. So I think financial technology, around the POS is really driving inclusion. You know what I mean? And they should do more.
Okay.
They are really doing wonders.
Thank you very much. And I think our Zoom guest is ready. Dr. Ajibola Olurotimi, Chief Lecturer in Banking and Finance at Yaba College of Technology. You are welcome. I quickly want to ask you. Yes, you're welcome. So what are the key regulatory hurdles that need to be addressed to achieve regulatory harmonization across West African countries, and what role can Nigeria play in facilitating these processes?
You are talking about the key regulatory framework that should be used. For foreign investment or capital inflow to really come in, there must be adequate infrastructural environment. What do I mean? There must be stable economic policies. It's very germane. Before you can talk about capital inflow, the environment must be suitable. No one will move his fund into an environment that is not politically stable. So political stability has to be addressed. It's very, very germane. Then economic stability. Economic stability attracts businesses, remittances, capital inflow. If the economic situation is okay, foreign investors want to come in to trade with you. And through that trading, funds will move in and out. So the environment must be conducive. Regulatory body must ensure that all policies must be harmonized, both monetary and fiscal must be harmonized towards ensuring that the economy move forward. Then products must also be created in both money market and capital market. So banks play a major key role in ensuring that capital inflow and outflow move in the direct position.
All right, thank you very much.
So,
Yes. Okay, so in the realm of technology sharing, what areas of expertise can Nigerian fintech companies offer to neighboring countries, and how can mutual beneficial partnership be established?
yeah, in the area of technology, technology drives businesses, it drives finances. So if technology is really harnessed, business will move. For example, now, if you compare the movement of business now and before, we will know that there is high flow of business, both in and out of the core country. For example, now, blockchain has really done much work in ensuring that wherever you are, you can transact business. So in the area of technology, mobile banking has played a major role. Mobile banking, people can stay anywhere and do whatever you are doing. Apart from that, the POS too is a very good mechanism towards ensuring that funds get to the hands of the average citizen. So the country must ensure that their regulatory framework is very sound and that the technology must be focused in such a way that it can promote remittances in and out of the country. For example, now, if you look at mobile wallet has increased the speed of payment. Apart from the speed, the convenience, can stay in your house and transact millions of business. You don't need to go to the bank. So all this technology has come in to ease remittances, businesses, and capital movement among countries.
All right, thank you very much, Dr. Olurotimi. I'd like to come back to the studio. Please don't go. We'll be back to you shortly. I want to talk about education and training. Of course, it's a very vital element. Education and training, yes, it's a very vital element for every economy to continue to grow and, you know, be efficient. So what educational and training initiatives should Nigeria undertake to develop the skills and knowledge required for professionals in neighboring countries, you know, to participate in cross-border financial services?
I would say financial literacy, you know, deepening more financial literacy, you know what I mean. Also, exporting knowledge from Nigeria. You know, Nigeria is one of the most excluded group of people in the world. So I think knowledge export around financial services, financial literacy, you know, also people being taught on how they can go about doing transaction around fintech, you know, and also keeping in mind on risk management, on how they can also protect themselves. So I think financial literacy is the key. If Nigeria can export more financial literacy to the neighboring countries.
Okay, so thank you. I'll come to Agayuri. So talking about risk management, you know, what are the specific risk management challenges associated with expanding financial services across borders, and how can Nigeria institutions mitigate this risk effectively?
The risk is a risk that somebody can get into your system and do all the wrong things with their accounts. Well, I think from day one, once you structure a system, you can put an anti-risk into it. That not everybody can just sign in and change things on your system. So once you can do that, then you can take it to the next step sending it out to people to use and see what happens. But the risk is clearly that people will get into the system and will do things to the system that what is not supposed to be done, and that is the biggest risk. If I have a chest now of money in it, and I give you all the permission to go in there and use it, take money out of it when you need and do whatever you want with it. The risk there for me is that you will go beyond and do beyond what you need.
Okay.
Now, how do you avoid that? Is addressing the client and saying, okay, this client needs 10,000 naira, and 10,000 naira is all these clients can have out of that box. If he attempts to do more than 10,000 naira, it won't go anywhere. So you have to put a lot of checks and balances in the system so that there's security in the process.
All right, thank you. Okay, you want to add to this?
I think I agree with what Mr. Ezekiel has said, that there must be checks and balances, and there must be a cap on what people can access to meet in areas of risk management, you know what I mean? So, like what NIMSI is doing in biometrics, so institutions like that, NIMSI can be expanded to have a lot of informal access to people's financial transactions and be able to determine the level they can play, you know what I mean?
Yes. All right, thank you very much. I want to come back to Dr. Olurotimi. Dr. Olurotimi, are you there? Okay, so I'll take this.
Yes, please, I'm here.
Okay, last question. A stable political and economic environment is crucial, you know, if we want a country to continue to attract investors, right? So I want to ask you, how can Nigeria ensure a stable political and economic environment domestically to attract foreign investment and build confidence for regional financial integration efforts?
Yeah, when you talk about political stability, you are talking of a country where there is political terrain that favor economic activities. For example, now, if you are in a country where there is frequent coup d'etats, or you are in a country where there is crisis here and there, no investor wants to come in there to trade with you. So the political terrain of the country must be stable. That will attract investors. Economically too, the macroeconomic policies must be harmonized. The monetary policy, fiscal policy, they must go along the same direction towards achieving government desired objectives. So these are very important. The exchange rate should not be allowed to fluctuate just anyhow. Interest rates should be harmonized. So all these go a long way to attract foreign investors and capital inflow into the country.
All right, thank
you. Know, you talk about...
Thank you very much, Dr. Ajibola Olurotimi. Because of our time, we won't be able to take so much. Thank you for your time. Dr. Ajibola Olurotimi is the Chief Lecturer in Banking and Finance at Yaba College of Technology. Thank you. So I want to come back to the studio briefly before we go. You have something you want to add to this very last question, so we'll wrap it up.
Yeah, well, I think what Dr. Olurotimi has said is very correct. It's top-notch. With political stability, you know, we've had democracy since 2000 now. So it's also, it's a way for investors to know that, oh, these people, they have a stable economy and they can come in. And like what you said, the micro policies and the macro policies should be in tandem. It should be in consonance and work towards a common goal. You know.
All right, thank you very much. Thank you, Dr. Sorry about that. Thank you, Mr. Ezekiel Gayori, right? And thank you, Shegun Oke. They are both financial experts. I must say thank you for coming, and thank you for the time spent. And this is where we call it a day on Business Insight. Until tomorrow, do join us at the same time on Souq News. My name is Grace Komalafe. Do have an amazing time out there. Bye.